Hello Mati Trader, and welcome to the first blind analysis for 2021. Basically, I'm going to go through the watch list that I have for the JSE ALSI to find and spot good trading opportunities for all of us. And just know this is the first time I'm looking at the markets today because I've been focusing on certain things for the webinars that are coming up going forward in the future. So, without further ado, let's get straight to the blind analysis. All right, so here's my watch list. It's not in a lot of companies, but basically we're just going to go through each one. Not really the fundamentals, more about the technicals to see if the trades are lining up according to the strategy. So what I want to look at is, here's first one, Angler. As you know, Angler has been an absolute beauty of a trade. But right now it has entered into a sideways slash bear market. And so I'm going to be very careful with choosing when to buy Anglo. I am going to have to wait for the market to turn back up because right now it is in a downtrend. It started the year off great and now we are in a sideways trend. Anglo Gold. This is a different story. Anglo Gold was coming down on a bear trend, and it then broke above, and now it is testing the level of the lows, but I wouldn't be surprised if it went back down to around 328 where it will bounce off and make up possibly a higher low, and then it will form some type of W formation where we will most likely to get in. But we have to wait. Trading is not about just taking trades whenever we can. It's about taking high probability trades and following our trading strategy exactly. Aspen. Okay, so Aspen, if you remember correctly, we took profits early on last year. And now that it's formed this beautiful cup and handle with a W formation, as you can see here, let me show you. So here is the cup and handle where there is a big rounding bottom, a small rounding bottom, and here is also a W formation. And once it broke above, it showed that there was upside to come. But the problem is that it opened quite high, pretty much where the target is near. And so I need to wait for the market to come back down, test the level of the support, and then we will get in and ride it up. But Aspen's looking good. I mean, it is in a bullish trend. Let's move to BHP Billiton. BHP also is another trade that we took profits recently. And since then, it has been coming down. I've been anticipating that it's going to break above this level, and then hopefully it would have formed this type of pennant formation. All right, so let me draw it for you. So it would have formed this pennant formation. As soon as the price breaks above, this is an awesome opportunity to get in and ride it up to the first high. And then it would have also formed possibly another formation. But let's just wait and see. Bidvest. Now this is a market that I do not like looking at. When it goes sideways movement like this and it breaks above and then back into it, basically this is good for range bounded traders, but not trend followers or breakout traders. We are waiting for a huge breakout and then maybe we'll look at Bidvest. CLS, you're learning your share codes. Clicks, doesn't it look like Bidvest? In that case, I don't even want to look at it. Discovery. Discovery is very interesting because it is continuing to bounce off these higher lows. But this type of movement where there is bearish candles all the way means that the sellers are winning, and there is a projection that this won't just bounce off and then ride on up. It actually will break down and continue down where it will hit possibly this support level since 2020, 18th of February. So I do expect this to continue down. We might even go short, but I'm not 100% convinced yet. We need to actually look at what the JSE ALSI is doing before we decide whether we're shorting stocks on the JSE. And you know, I'm not a big shorter, as you know. Here is FirstRand. FirstRand is another market that it's difficult to pinpoint where the market's going. Hey, give me light. FirstRand is another market that doesn't look very great. It broke out of this W formation. We got in, we banked our profit, we were very happy with it, and now it looks like it's forming this type of head and shoulders formation, and if it breaks below, then it will continue the sideways trend since 16th of March. It will continue moving to the sideways movement. Let's go to GRT, growth point. I don't like what I see with growth point. You know, whenever you see these type of gaps and movements where a market breaks out of a downtrend, it gaps up, it forms these engulfing candles, and engulfing candle basically means that there is a very large candle that's engulfed the previous candle, and then it gapped, and this is normally a start of a new trend, which in this case should have been a downward trend, but instead it moved sideways. You can't do anything with these markets at the moment, so we might as well just skip on over to Kumba. Kumba looks very similar to BHP Billiton. It was going up very nicely during the year, and then it broke below. The question is why? Why are resources breaking down? Because we are starting to see an economic recovery slowly. We're starting to see businesses go back and adapt to the new ways of work. We're starting to see China start buying into commodities again. So the fundamentals are not weighing up exactly with the technicals. So I'm going to leave Kumba out for now. Mediclinic, sideways, nothing to brag about, nothing to be excited to get into. If you're a range bounded trader and you found another Timon or Mati trader that only deals with range boundedness, then perfect. But I don't have enough statistics to base those buy and sell decisions. Mr. Price, we're still in it. We are currently in the money, all right, or just in the money, and we've still got our stop loss way below. It broke above this beautiful pennant formation or wedge. I don't know if it's been more than 3 months. No, it's a pennant. So it broke above this pennant, and now we are waiting for some traction to move up where it will hopefully hit our take profits. But we've got our levels in place and we're just holding. Netbank, I assume, looks like FirstRand. Exactly. Sideways, broke above, came back down into a sideways formation. And it's funny because retailers and banks used to be the best stocks to trade 4 years ago. 4 years ago, all I pretty much looked at was retailers and banks. In the last 4 years, all I've looked at is insurance and resources. And resources have been incredible over the last 4 years. Retailers and banks, well, they're not looking great yet, but there might be something forming that's in the bigger scheme of things, that when we're done with this pandemic and there's a new fourth industrial revolution with the way businesses are adapting into the future, then I'm sure we'll be able to get back into banks and retailers, and they'll have new ways and new projection ideas for growth. Right now, it is still the old school way of doing business, which is, B2C and C2C, and actually physically meeting the downloadables and the online type product, whether it's drop shipping and delivering, is not at its optimal level as it should be. And when it is, when we're thinking instinctually of ordering products or downloading services or products, easily, then only then, which might be in about 2 years still, then banks and retailers might start looking good. All right, let me stop waffling there. Netcare, another stock that we're in, and we're nicely in the money. We got in at around this level. Remember, where you get in, when I get in, might differ just a little bit, but the most important thing is that the risk is lower than what you're willing to gain. So Netcare has not only gone above our entry level and bounced off the support, it's also forming this awesome cup and handle, which will basically give reinforcement that we have a better probability that the market will continue up and bank our profits or hit our take profit. All right, Old Mutual, another stock that we're in, and it's also above our entry level. We're nicely in the money, but remember, just because you're in the money does not mean that we've secured the profit unless we move our stop loss at a higher price, which I'm not doing just yet. Maybe if it reaches 14 Rand 30, I'll raise the stop loss. Until then, look here, we have this cup and handle that formed, broke above, that's where we got in. It tested that level, and now it looks like there is upside to come. So once again, insurances, resources, and healthcare are the sectors that seem to be working very well with the multi-trader system. Remgro, sideways, gaps, too many gaps, low volatility, which means that there's indecision as to where the markets are going. So for us, that's basically a no-brainer to leave it alone. RNI, same, sideways, not even worth looking at, spending time on. Sappy, it broke out of this W formation, and we actually missed it. Sorry, guilty. It formed this beautiful W formation. It broke out. It gave us our entry. We would have been nicely in the money. But sometimes I just don't see all the patterns. And the reason is because sometimes I'm looking at the chart and it looks like this. And then there's no pattern that's formed. And when I zoom out and then all of a sudden I see a pattern, and then I hit say, damn, I should have just gone back, a bit more in time and see if there was a pattern that lined up. But I'm human and we can't get all the trades. Hopefully in the future, that's how I learn as well, to try and take more trades than not. But also we have 8 positions open. Well, I have 8 positions because I've got multi-trader and then I've got another trader service, and I don't let those conflict with each other. But we got a lot of positions open, so it's okay. It's really okay. And what about the 40,000 stocks that are available worldwide? Like, I still look at the America, FTSE, the Nikkei, commodities, cryptocurrencies, and yes, we will be incorporating that this year into the premium multi-trader service, but I'm a perfectionist and I want this to be perfect. Standard Bank, same as FirstRand, a little bit better because Standard Bank formed this ascending triangle, right, as you can see here. And it kept hitting on this ceiling level and resistance level, boom, 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 broke above, and now it is entering into this sideways box formation. And if it breaks above 135.30, we'll get in and we'll ride it up. All right, let's go to one of the retailers, Shoprite. Shoprite we're in actually. I'm in. And it's not looking that good. It's back to our entry level, and but maybe it's testing. What I would like to know is that, are these higher lows going to sustain? As long as they sustain, it's going to continue making higher highs, and then it will hit our take profit level, and then we can move our stop loss. But you can see how far away our stop loss is. And you know what? If you manage your risk exactly, it doesn't matter how wide a stop loss is. You can risk 1% of your portfolio, 2%. You can risk 0.5%. All right, it's a myth saying the bigger the stop loss, the more you're risking. No, that's relevant to how many CFDs you're holding. And if you read through all my reports and all that stuff that I gave you when you join the premium multi-trader service, it should be very easy. And the calculators, of course. All right, this is fun. Let's go to Sunlam. Sunlam, sideways, not worth any more of my breath. Sasol has broken above. It's formed this, it's not very attractive for a cup and handle, but I would consider it a cup and handle, considering the fact that it made a low, it made a handle, it made a cup, And you know what? Tomorrow, maybe we'll get in. Let me write that down. Sasol looks like a trade potential buy due to an unattractive cup and handle, which basically just means it's a medium probability trade. Instead of risking 2%, I'll risk 1.5%. Very easy. Next is Spar, another retailer. Could have guessed it. We're in it. It almost hit our stop loss. It's close to our stop loss. We can't win all the trades. Remember that. I know we've had an awesome year in 2020 and we're doing super well in 2021, but we got to take some losses now and then. And Spar looks like it's going to come down and hit our stop loss. The Fishini Group. Nothing to really look around. There's low volatility. There is, let's take a look at the broader side of Truworths. The Fishini Group. If we draw from the high and we move down, it's still in a downtrend. However, it is forming higher lows rather, and if it breaks above, then we could get in. It would be a medium probability because we'll be getting in within a bear trend, but it's a potential trade that I'll write down. 109. The Fishini Group, we could be getting in at 109. Not great. I mean, these trades aren't sticking out like sore thumbs, but they are lining up according to the strategy. This one here, Truworths, what I don't like, you can see the W formation that's formed. The problem is this gap. We don't want gaps when you're trading because gaps have 75% chance of closing. We saw GameStop closed. We saw silver closed. And Truworths, normally when there's gaps, either if there's good fundamentals that came out which brought it up and made the buys, the thing is that there is still that imbalance between where the price was and where the price is at. So it does have a 75% chance of closing, which means it is a no-go. Vodacom, oh my gosh, this one, this one's my fun trade. It has, we've been holding this a long time and we are paying daily interest finance charges. And if you're out, cool, it really is cool. For me, it's just a fun trade. Holding it, it's still between my stop loss and my take profit. I'm not very emotionally involved. For example, I'm not lowering my stop loss. I'm not increasing my risk other than the daily interest charges. I'm just holding it and saying, you know what? It's in the sideways range. We got in ages ago and I'm just holding it for fun. Let me break the rule once in the service. This is my human aspect and my fun aspect with trading. Woolworths, we are nicely in, highly in the money. I think it's nearly time to move our stop loss up. Yes, I think tomorrow we'll be moving our stop loss up, securing that profit so that if the market does move against us, we'll have hardly anything to lose. And now finally, let's take a look at the ALSI. I always forget, is it the one with the brackets or the one without brackets? Let's go brackets. Yes, okay. So let's take a look at the ALSI and see what is going on. ALSI, can you tell us where you're heading and why are there so many gaps? What is going on here? I feel like every time I look at the ALSI, I'm looking at it with new eyes. All right, so let's start off with on the 18th of February 2020, so pretty much a year back, it formed this V shape, which normally with a V shape it's unsustainable and it has a high chance of the price coming down, which it did, and then it formed another V shape except to the upside, so that it rebalanced the highs, broke above, and now it looks like we are in an uptrend. This is a bullish market. We are in a bullish market with the ALSI, and if you looked at those trades that I'm looking at, Sasol and the Fishini Group, basically I'm only seeing longs, except Discovery. I think we saw a potential short. I'm writing that down, but the ALSI does look like it's going to be heading up further. And how do we calculate the target? Well, we can take the difference between the high and the low. So here's the high and here's the low, and we can add it to the high. So what I'm going to do is I'm just going to use my fingers. I'm going to take the high and the low and move it up, and basically, oh, let me do that again. Basically, we have a target at 70,800. 70,800. Pretty cool. And a lot of trades we're going to be taking while the ALSI rallies. So that's it for the blind analysis. Hope you had fun. Let me know in the comments. Like, share, and subscribe, of course, so that you can get my other trade videos. And remember, this is going out to premium multi-traders only. And maybe in a week or two, when things have passed, then I'll make it public so other people can see what they missed out on, so they can join our community of profitable traders and just grow with it. But now, before you go, I have been getting a lot of emails saying, I missed the webinar, it was a bad day, what can I do about it? And so I am hosting it again on the 13th of February, Saturday, and then that is it. And then I'm done with the beginner, because it's not in my personality to keep doing the same old, same old. I like doing new things. So I'm going to be doing the intermediate and advanced and all that stuff. But I do highly recommend, if you didn't join the beginner CFD. It was awesome. There was a nice format with Zoom. We got to ask questions. We got to see live examples. And just so you know, there were other things that were covered than what was in the multi-trader system program. Because in the program, level 1 was the beginner stuff, and that was just 20 minutes, right? And this was a webinar for 2 hours going through the beginner stuff of CFD. So it covers every little aspect. And here it is at the end of the event. This is the stuff you'll know: supply and demand, the differences, trading and investing, understanding CFD trading basics, what is a CFD, know all the markets available to trade, how gearing acts as a money multiplier, shares versus CFDs, where I gave examples, disadvantages with shares, trading CFDs, and advantages and disadvantages. Now we're halfway. How to choose your ideal broker, how to open a trading account, know the best chart types and why, how the market trends work, the 3 only trading levels, how to close your CFD trade, when to close your CFD trade, the 5 inevitable trading outcomes, questions and answers. So it's a lot of information. It's really awesome. It's highly illustrated. There's a lot of fun aspects to learning the trading, but most importantly, I cover pretty much everything about the beginner part of CFDs. And as a premium multi-trader subscriber, I highly recommend that you just send me a quick email saying, Timon, I want to join this beginner CFD, so that I can give you your premium 20% discount, which nobody else gets. And it'll be awesome to have you there. The questions and answers are also important, so you can actually ask the deeper questions that you have, anything intermediate, advanced. If you have indicator questions, if you have general questions, if you have the paradigm shift of trading that's taking place now with GameStop and how social media is interfering within the fundamental analysis of trading, I want to hear it all. And this is the journey that we're on now, which I wish I was on when I was younger. And now, I mean, I'm happy to lead the way, but I'm also happy for you to be with me during this journey and to learn trading all together and profit together and turn that 3% of successful traders into at least 10%. So, hope you enjoyed the webinar, and we'll be chatting soon. Remember to like, share, and subscribe, and comment, and send me that email to timon@timonandmati.com saying, I want to join the beginners webinar. That's all you have to do, and I'll send you your 20% discount voucher. Have a good one and keep well.